Today's pop quiz, let's look at two scenarios and see which one will provide us more return. Scenario 1, the market is at $200 per share for the first year. It goes down to $120 the next year. It stays at $120 the third year. Then in the fourth year, it shoots up to $280. In the fifth year, it ends up at $200, the same place where it started. Scenario 2, the market is at $200 the first year, $220 the second year, $240 the third, $260 the fourth, and $280 the fifth year. Which one do you think ends up making you the most money at the end of year 5? Hey everyone, welcome to my channel. I'm Panky. In today's video, I'll open our Fidelity brokerage account and show you what I'll be doing in the account. Then I'll talk about how to invest in the volatile stock market, and we'll go over the quiz. And FYI, I have timestamp in this video, so feel free to jump where you feel like. Without further ado, let's get started. It's now 7:40 a.m. on September 16, Friday. I just logged into my husband's Fidelity account and this particular brokerage account that he gave me permission to access and make changes to. The reason we're using his account for today's presentation is because this is the only account that we have with the entire balance sitting in cash. Currently, he has $46,756.10 in the cash position. The money was from his RSU released to him, so previously the entire balance was in one stock. He liquidated the position. Now I get a chance to show you what I'm going to do with the account. I'm going to buy one mutual fund, FZROX, Fidelity Zero Total Market Index Fund. I'm going to buy $2,000 on today's date, September 16. When I publish the video, it's going to be one day or two later though. It's currently not being reflected in the position yet, and that's because FZROX is an index fund, also a mutual fund. When you buy a mutual fund, the order will be filled when market closes at the price of that point of time. Now if you go to order, you can see the order I just placed, and I can cancel the order of a mutual fund before the market closes. Now I'm going to account features and payment and transfers, automatic transfers and investments. Click view and add, then schedule a new transfer. We want to set up an automatic investment. Yeah, this is the right account. I'm choosing core position, which is cash. If you need to move money from your bank, you'll go with an external bank account and set up an auto investment from your bank to the core position first. Then after that, you will move money between your core position and your mutual fund position. So that'll be two-step process. Okay, hit continue. In order to set up an automatic investment, you need to have at least one mutual fund position in the account. Because I just placed the order, even though it's not filled yet, I'm still able to select the fund from the drop-down menu, and I'm investing $2,000 to FZROX every month. If you think the content is helpful, give it a thumbs up and consider subscribing my channel. Every week, I'll upload content of investing, taxes, and personal finance topics. Okay, let's come back. In 2022, we've just witnessed the worst first half of a year return for the broad-based S&P 500 in 50 years. The index has fallen into a bear market earlier in June, and today we almost fall greater than 20% threshold again. The once bubbly tech-heavy Nasdaq Composite fared even worse, losing roughly one-third of the value on a peak-to-trough basis. Bear markets can be scary. That's why they witness lower participation from people. But bear markets are when wealth is truly created for smart investors. The key word is smart. Remember, the market's long-term trend is always to the up and right. We would not want to let opportunities slip through our fingertips. I'm not here to try to challenge the point of view that the stock market lows in June could be retested, which is likely triggered by recession fears caused by the ongoing interest rate hikes by the Federal Reserve to combat red-hot inflation in a slowing U.S. or world economy in general. Also, the Federal Reserve's quantitative tightening program will ramp up to its full potential in September. However, nobody knows exactly what will happen. I would not want to listen to the bear market bottom indicator voiced by the financial media here and there. The stock market is very volatile in these days, and the market is always forward-looking. In short term, movements are driven by sentiments, and there are so many uncertainties in the global economy and thus stock market. Okay, now let's look at today's quiz. Which one do you think ends up making you the most money after 5 years? If your instincts tell you the second one, you are not alone, but let's take a closer look. If you invested $2,000 each and every year after 5 years, in scenario 2, your $10,000 investment will turn into $11,832. Pretty good, right? But in the volatile stock market, in scenario 1, you'll wind up with $12,095 at the end of year 5. And this is because you've got to buy more shares when share prices dropped to $120. By dollar cost averaging into the market, we take our emotion out of the picture. This is crucial because when we try to time the market, we most likely do not always have the discipline to buy when one market feels too high or another drops too low. Stock market is unpredictable, and you never know when it would go higher highs or lower lows. For the 2000 so-called lost decade period, if you had invested $1 in the S&P 500 on December 31st, 1999, 10 years later, it was worth only 90 cents. But Dr. Burton Malkiel, the Chemical Bank Chairman Professor of Economics and a senior economist at Princeton University, had shared that if you had spread out your investment through dollar cost averaging, you would have made the money during that same period. Time in the market is important, not timing the market. Thank you so much for watching the video. If you think the content is helpful, give it a thumbs up. Feel free to comment down below and subscribe. And thank you. Every week, I'll upload contents of investing, taxes, and personal finance topics. Please consider subscribing my channel and turning on the notification bell if you are interested in these topics. I'll see you next week. Bye.